Well, good morning. It's me, Kenny Polcari, and I'm coming to you live from the Money Show in Las Vegas, Nevada at the Paris Hotel. It is sure to be a packed couple of days here in Las Vegas. I've got a full day today. I've got presentations in the afternoon, dinner tonight, and then I'm on a red eye right back to Florida. In any event, today is Wednesday, February 21st, 2024, and here are the things you need to know to get your day started. So I'm just going to tell you, brace yourself, because it's all about Nvidia. Remember, all roads lead to Rome, and in this case, maybe they lead to Nvidia as well. Stocks struggle to hold on to S&P 5000, but we've been talking about that, so that shouldn't be a surprise. Again, I'm going to tell you, brace yourself, because it's all about Nvidia, or at least that's what they want you to believe. And what do we have for dinner tonight? We're having linguini with a spinach ricotta pesto. Oh my God, it takes you 15 minutes to make. It's going to become a family favorite. Now, let me first start by saying I have the honor and the pleasure and the privilege of hosting Sleepstone Wealth's 2024 Investment Outlook and Policy webinar. It's a conversation with Liz Ann Saunders, Chief Investment Strategist at Charles Schwab and Company. We're going to do this on Tuesday, February 27th at 3 p.m. Eastern Standard Time, right? You can find the link on my LinkedIn page. Go there, I posted the link. You can find it on my Twitter, and you can find it inside my note. Just click on that link. It'll take you to the registration page. Quick to reserve your seat, because seating is limited, okay? So, like I said, all roads lead to Rome. This is a reference to the Roman Empire, where all the roads radiated out of the center of the city. So no matter which one you chose, you ended up right back in Rome. So let's just say it up front. Today, all roads lead to where? Nvidia, right? Now, no matter what happens today, good or bad, it's all going to be because of the pressure they're putting on Nvidia, just like it was yesterday. We'll talk about that in a minute, and likely it's going to be like that tomorrow. Earnings are due out after the bell today, right? The stakes are high, as Nvidia is at the center of the AI revolution. The stock is up 47% year to date. It's up 250% since in 2023, and the 47 on top of that. So you can imagine all the speculation that's been building as a result of this excitement. CEO Jensen Wang never disappoints, but here's the issue. The stock is priced to perfection. There is no room for error, or there's no room for perceived error, right? He almost can't win here, right? But he can announce a stock split, which I'm kind of hoping he does. Investors, traders, and algos have created this panic. They have taken this stock, and a few others, by the way, to valuations that are begging for explanation. The AI craze consuming the daily conversation. So strap in, because no matter what happens today, like yesterday and most likely tomorrow, it's going to be all about Nvidia. And since the earnings are due out after the bell, in fact, the real action may come tomorrow, but let's see how the day unfolds. Nvidia is also already down 6% in the pre-market. Now, stocks fell yesterday. I'm not going to say sold off, because that suggests a bigger fall, right? And I guess who was at the center of all this attention, right? Who was the grand marshal, per se? You guessed it. Anything tech, right? Led by Nvidia, down 4.3% yesterday. Amazon down 1.5%. Apple down 0.4%. Tesla down 3%. SMCI down 2%. ARK down 2.5%. Cyber down 1.7%. C3.AA down 5.8%. IBM down 2.2%. ASML down 2%. AMD down 5%. And the list goes on. And you can understand why. It's all about the risk. At 4 p.m., the Dow lost 65 points or 0.2. The S&P lost 30 points or 0.6. The NASDAQ down 145 points or 0.9. The Russell lost 28 points or 1.4%. The transports gave up 165 points or 1%. And the equal-weighted S&P lost 20 points or 0.3%. All of this as investors prepare themselves for the Nvidia event. I mean, even taxi drivers are talking about that, and that usually signals the top, right? All you have to do is think about the dot-com bubble back in 1999. And you can feel the pressure building, right? No matter what happens, it's not going to be enough. They want so much that they even want more than that. In my view, the path of least resistance is down, just because the move up has been so dramatic, right? The move up into this earnings reporting season has been so dramatic. The trader types are going to hit the sell button to lock in the big profits, and the big asset managers that own millions of shares will peel off a piece and raise some cash. Why? Because they can and they should, as it takes an even bigger position in the portfolio, right? Raising the risk profile of the portfolio. So again, you have to be careful about assuming why sellers are selling. You don't know why they're selling. Is it bad news, or is it just risk management? And then what about the investors that are buying Nvidia during this time? What are they doing? Well, some are using the weakness to build up their position. Some are just getting started in building a position. Think about that what you want, but people do start somewhere. And some may even be covering a short position that they created coming into this report. Now, if by chance Jensen does disappoint or is perceived to disappoint, then expect a bigger fallout. But remember, Apple reported earnings of $119 billion in 3 months. They offered upbeat guidance, blah, 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 all that stuff. But the trader types were unhappy because they only earned $20 billion in China instead of the expected $25 billion, right? They took the stock down 3% that day and then another 3% over the next couple of days, only to have it rally back 6%. That was until, again, last week when speculation began to build up again about what Nvidia is going to do and say. And that's affected anything in tech. And that was the story yesterday, and that's going to be the story today, and then again, most likely tomorrow. And maybe even next week, right? It depends on what Jensen actually says and what the report suggests or indicates about the future of Nvidia in the AI space. I'm not worried about it at all, just FYI. EcoData yesterday saw the Philly Fed non-manufacturing survey plunge by 8.8 points. This on top of the 3.7 point fall last month. And that suggests for some weakness in the services sector, which translates to weakness in the economy, which translates to the need for JJ to cut rates. They just can't let go of that rate cut narrative. They're going to beat it till it's dead, until they get their way, right? But we're going to need more than the Philly Fed non-manufacturing survey to drive that conversation. We're going to get more services data tomorrow, and that's expected to remain in expansionary territory. So again, conflicting data. But we need to consider all the data points with all the other data points that are going to present themselves over the next couple of weeks and months. And remember, I'm still in the no rate cut camp, right? The data doesn't support it. But I'm one lone voice in a sea of many. I just think the data continues to be too strong, and so therefore it's going to be hard for JJ to convince everyone why he needs to cut rates. Bonds, which have been under pressure of late, sending the 2- and 10-year yields higher, did find some buyers yesterday, and that sent bond yields slightly lower. Nothing to write home about. The 2-year is still yielding 4.58%, the 10-year is yielding 4.25%, rates well above where they were just 2 weeks ago, but below the level that is sure to create angst, or even more angst for investors in the markets. And with the deluge of supply coming to the markets this year, the jury is still out on where bond yields will be next week, next month, or even next quarter, right? Because they're due to probably be higher. EcoData today includes the January FOMC minutes, and do you really expect to learn anything new? Do you think that the minutes are going to change the narrative? They won't, but you can be sure that that there are some that are going to try to find a word or a sentence that challenges that higher for longer conversation and narrative, because they're always looking for a reason to tell that story. Again, I expect to learn nothing new from this release. And mortgage apps, they took a hit, down 10.6% as mortgage rates rose over the last couple of weeks. Current 30-year mortgage money is now trading at 7.25%, up from 6.8% just a couple of weeks ago. Tomorrow brings us the S&P manufacturing and services PMIs, both expected to be in expansionary territory, and existing home sales, which are expected to be up 4.9%. But it's going to be interesting after that mortgage number, right? Those would be the data points that do not support the rate cut narrative, but rather support the higher for longer narrative if they come in as strong as those estimates suggest, right? Oil continues to toss around in the $75, $85 range as the tensions in the Red Sea remain high and shipping costs surge as a result, right? This morning, oil's down 50 cents, trading at 76.55, remaining right in that level. Gold also tosses around the 2,000, 2,050 range as it too awaits more data on what the Fed intends to do, or maybe not, right? Will the minutes change that story? Now, this morning, futures are down. No surprise there, right? I mean, are you really surprised that they're down? Dow's down 65, the SP's down 10, the NASDAQ's down 80, the Russell's down 6, right? It is the ongoing nervousness surrounding Nvidia and the reaction of the algos. Look, Nvidia's down 6% in the pre-market trading today, to which I'll say don't get dragged down unless you are so overweight Nvidia and tech that you can't help yourself. But then again, that also depends on who you are and where you are in the life cycle is going to dictate how much risk you have and how much you want, how much you can live with. So you have to know who you are. But in any event, hold on to your hats, right? The market's been looking for a reason to back off. We discussed this. I'm just hoping that this is finally the catalyst, right? A nice swift 5% pullback would not be the worst thing to happen and is well within what's considered a normal trading pattern. And it would give the long-term diversified investor a chance to go shopping. right? Because that's really what you want to do, take advantage of the weakness, right? All I'm saying is the market never moves in just one direction forever. Valuations get stretched and then they reprice. The repricing most times depends on how stretched they actually were. Other times the repricing can happen because the story in fact changes. And as a long-term investor, you have to be able to know the difference when it's just a story or when it's just stretched, right? If you're a day trader or more active trader, then none of this makes any difference to you at all. You just want them to whip around. You want to buy them, you want to sell them, you want to trade them, but that's what makes the market, right? Both buyers and sellers. Some have the long-term view, some have the short-term view. Stocks in Europe are mixed this morning. Only the UK is in negative territory, and while there are some earnings due out, there's no eco data to drive the tone there. So markets there are going to really await the tech reaction here today, right? Because that will permeate really around the world. The S&P closed at 49.75 yesterday, down 30 points, leaving it once again struggling to hold on to the new millennium, right? The 5,000 level. Again, the short-term trend line support is at 48.21, down 3% from where we are right now. Intermediate-term trend line is at 45.98, or 7.5%, lower again, still in the normal range, right? It's a bit more uncomfortable, but it's still normal. And the long-term trend line is way down at 44.89, or 9.8% from here, or 10.7% from the all-time high of 5,026. So just put that in your mailbox, right? Because it's not a stretch to get there if something unforeseen happens. And while it will be more uncomfortable, it will shake the branches enough to cause investors to rethink valuations. I don't think that's where we're going, but I also would not be surprised if the algos overreact at some point, which they always do. Anywhere between 5,000 and 50 still feels a bit toppy to me. So if we rally back there, I think we're toppy and we back off. And so I expect more backing and filling. I just hope maybe this is the start to that backing and filling. You call me to discuss, because I'm always happy to talk about it. Now, I'm away for the rest of the week. I'll be back on Monday, February 29th. So the next update will be then. So now what do we have for dinner? So I made this the other night, right? It's a linguini with a spinach ricotta pesto. It is simple to make, takes you 15 minutes, will become a family favorite, right? Because it's just, all you have to do is boil the water, because while the water is boiling, you can make the spinach ricotta pesto and bang, you're done, right? So you need a pound of linguini, you need one big fresh bag of baby spinach, right? Fresh spinach, you need olive oil, fresh grated Parmigiano cheese, pinoli nuts, and fresh ricotta cheese, and obviously salt and pepper. You want to start by bringing a pot of salted water to a rolling boil, put it on the back burner so it's there ready when you need it. In a large saute pan, you're going to heat up, so a little bit of olive oil, add the spinach, you're going to saute it around until the spinach all gets nice and soft and cooked, right? Now, when that's done, take the pasta, add it to the pot, let that cook for 8 minutes. Take your spinach out now, put it in the food processor. Add in everything else. Add in the pinoli nuts, the salt and pepper, the olive oil, the fresh grated Parmigiano cheese, and the ricotta. Maybe it's 2 tablespoons of ricotta, 3 tablespoons, depends on how much you're making, but at least 2 tablespoons of ricotta, right? Put it in the food processor, blend it all up, and you're gonna make this nice spinach creamy ricotta pesto. When the pasta's al dente, take it out with tongs, put it in the saute pan, add the spinach pesto to that with a ladle of the pasta water, which you know we call Tears of the Gods. Mix it well, shake the pan a little bit, get all nice and creamy. You want to serve it immediately. It's simple, fast, and delicious. You can also serve this with some fresh toasted garlic bread, because that always works well, and a chilled white wine. And you know me, I always go for the Pinot Grigio Santa Margherita. In any event, it is Wednesday, and it is going to be an exciting day. And until Monday, take good care.